Today is Bank of Canada interest rate meeting day, and as was widely expected, the Bank of Canada announced no changes. But it's not so much about what the bank did with the prime rate, it's more the story and the press release. So let's dive a little bit deeper to hear about what they had to say. The bank noted that during the summer, we had a very strong recovery phase. It was almost like a quick bounce back. But in the most recent press release, they're starting to observe more moderate growth. And that growth isn't the same right across the economy. It's very sector specific. Specifically, the oil sector and out west has been impacted. Lower income households have been further impacted. So the bank is really highlighting that difference in the economy and really pledging support for lower income households with further programs that they're announcing in that press release. When it comes to GDP and inflation, two factors that the Bank of Canada looks at for signals about which way the economy is moving. The bank has noted that there has been a 5.5% decrease to GDP growth, which is pretty substantial. There's no doubt about it. We're in a recession. That's not news making. They have projected forward that on average in 2021 and 2022, growth to GDP will be approximately 4%. So that's a very modest growth rate, really not getting back to pre-pandemic levels until 2023. When it comes to inflation, inflation has remained low at about 0.5%. The target for the Bank of Canada is 2%. So this is really an indicator that there isn't a lot of growth in the economy. Finally, the bank pledged support to the economy. They have said that it will take extraordinary support to help the Canadian economy recover. And so they're actually projecting that up until 2023, it'll be necessary to keep the prime rate at the lower bound. So that means that really for the next 3 years, we shouldn't expect to see any change to the prime rate. And they're also continuing with the quantitative easing. So that's that purchasing of up to $4 billion of bonds per week to continue to keep liquidity in the economy, to keep interest rates low. So that is the story for the Bank of Canada meeting in October 2020. My name is Christopher Mulder. I'm the principal broker of Tridac Mortgage. If you have any questions about this and how the latest news affects you, drop me a line. I'm just a phone call or email away. Bye for now.